Welcome back. Well, as promised, Tregg Cronin as well as Darin Newsom joining us for the roundtables this week. Well, looking back at this past week, another wild week in the markets. You have the battle between outside money and those recession fears against weather forecasts. But Darin, as you look at it right now, what has been winning out in these markets?
So far, the move out of the commodity complex as a whole by investment money has been winning out. I mean, we've seen a lot of pressure. We've seen a lot of liquidation. It doesn't matter what market we look at. Hasn't changed the fundamentals. Fundamentals are still bullish pretty much across the board. Just can't get anybody to buy, and that's even with the type of weather forecast we've seen, particularly for corn and soybeans, and that long-term inverted forward curve that we see in crude oil. Investment money is just not interested in any of it at this point.
Yeah, Tregg, I mean, where you are in South Dakota, you look at the forecast next week, and there is a wide just bubble of heat that is setting right over that western corn belt. It doesn't seem like it's coming at a good time for corn production and heading into soybean production, but have the markets even responded to those forecasts?
It certainly doesn't feel like it. Both as kind of having my analyst hat and farmer hat on. It's definitely a bit perplexing because the forecast really couldn't look any worse for anyone west of the Mississippi River. But I think that the price action the last 10 days, 2 weeks is a pretty clear sign that we just cannot get any momentum to the upside because of the macro influence right now. And as Darin kind of alluded, got crude oil dropping $8 a barrel. The GFS or the European model or whatever, that's not going to change that kind of outsized money flow. And as I guess I find myself reminding guys a lot of times, when we look at our markets, the corn, soybean, wheat market, we're talking about markets of billions. And when you're looking at, fixed income, equities, energies, you're talking about markets of trillions. And so the whiplash effect is just stronger right now than the fundamental drivers behind the yield. Eventually that's going to matter. Right now it's just tough to stand in front of this with the outside influence that we're seeing.
Yeah, Darin. So when you look at some of that outside money now setting on the sidelines, when or what would incentivize them to come back into commodity markets? How long are we looking at?
Yeah, that's an interesting question, Tom. I mean, to me, what some of this money could be waiting on, particularly if we're looking at the ag markets, is early August, because if they are long only futures funds, and if they have to be in the nearby futures contract, they don't want to deal with the ridiculous August and September soybean contracts. They don't want to deal with the hybrid September corn contracts, so they're going to wait until we get into early August and we start to see the fund rolling, those that are still in the markets from those contracts out to the November soybeans and December corn. They're going to jump back in, particularly if fundamentals are still bullish. And at that point, they'll also have ridden through what is expected to be a 100 basis point hike by the U.S. Federal Reserve this month. So we'll get all of that out of the way. We could also start seeing the possibility of some short-term bottoms being formed in the three key U.S. stock indexes. So there could be a lot of things coming together at the end of this month, possibly bringing the money back in August.
Okay, so Tregg, if you are a producer that's still setting on old crop, and according to USDA's latest grain stocks report, it looks like there are more farmers setting on old crop. So if you are, and you're hearing that no matter what the weather forecasts look like, this outside money really doesn't have incentive right now to get back in, what should your game plan be?
We can't change the fact that we've, in 30 to 40 days, depending on where at in the corn belt you are, we're going to roll the new crop. So regardless of what the size of this crop is, there's still going to be more than we can use, September 15th, October 15th. And so those bids are going to roll and you're going to lose another 60 to 70 cents. So if you're waiting for some kind of a bottom, a short-term bottom, even a weather rally, I think you've got about 20 to 25 days to find that out, because at some point we are going to shift our mindset to new crop. And those bids are going to fall, those cash prices are going to fall. So I think there's a window here of about 20 to 25 days for things to kind of do what they're going to do if these forecasts don't change. But that's kind of what we're waiting on is does this forecast change? Do we start to see some better weather as the calendar flips to August? Or, are we really putting the hurt on this thing? And if we are, I think we're going to know pretty quickly.
Yeah, definitely. Good reminder. All right. Well, This week, USDA had another report. It didn't touch yield when it came to corn or soybeans, but were there any surprises? We'll ask Darin and Tregg coming up later on U.S. Farm Report.
Registration is open for the 2022 Pro Farmer Crop Tour. Join our team as we gain insight on the 2022 growing season in person or online. Visit profarmercroptour.com/register to select the stop nearest you.